Welcome to the year 2021. A lot of us have different goals for this new year, and one of those goals might be, I want to get started investing. I want to learn how to invest in the stock market. Well, I decided to put together some tips to help you on this new venture. However, I'm not going to be the only one talking on this video. I decided to get some of my favorite creators and some of the people that I've learned a lot from when it comes to investing to share some thoughts on this video. So let's get this show on the road.
Good afternoon, my name is Tre McKee, getting in touch with you from Japan. Thank you so much to Kalechi for this collaboration invitation. My tip for this year would be to learn how to set goals. I often get a lot of people who getting in touch with me who are like, hey, dude, I've been riding this stock and I've gained this much money. Should I sell it now? And I also get a lot of people who are like, oh, dude, I heard about that stock and it's so hot. Like, maybe I should get it. Should I sell it now? And even worse, like, should I sell this one so I can get that one like right now? And there's like a lot of kind of panic and a lot of rush going on with a lot of people. And I'm insanely unqualified to answer those questions for you because I don't know you. I don't know your goals. I don't know your financial situation. And I'm not your advisor or anything like that. But basically what you're doing is you're letting the market run your life. You're letting other people's investment decisions and the market run your life and your decision making. And that's going to tire you out really quickly. So my suggestion for you is to learn how to make goals. So if your goal is something like, I want to have my portfolio paying me $1,000 of dividend income every year, then it's really easy to start taking steps to say like, oh, maybe I need to learn how to find long-term dividend paying companies, or maybe I need to figure out companies that are growing that pay a higher dividend payout ratio, something like that. Another example of a goal that can help you make better decisions would be, this year, I'm going to be depositing 10% of my paycheck, and rather than just leaving it as cash, I'm going to be investing that, and I want to make at least 10% return this year. So on our channel, we've been covering individual stocks, and recently we've been looking at a retail company called Nordstrom, and I recommended Nordstrom, and I got into Nordstrom, and then in about a 1 month period, it almost tripled. It was up 300% kind of thing. And a lot of people were like, dude, should I sell? Oh my gosh, is it gonna keep going up more? Should I buy more? And if your goal was to make 10%, or if your goal was to make 200% or whatever it was, then your goal would be met, and you could just say, okay, I'm gonna take my gains, I'm gonna chill for Christmas and New Year's, and I'm gonna start researching the next company. You wouldn't have to be like, oh my gosh, like what am I gonna do? Because your goal is the one that's guiding you, not the market and other people. Another little bonus tip is dollar cost averaging. Dollar cost averaging just means buy the stock slowly and then sell the stock slowly. And if you're doing that, you don't have to be so concerned with the daily ups and downs of the stock market. I can't watch the stock market because I live here in Japan and Wall Street's open while I'm asleep. And so I just put in orders when I'm awake and the rest takes care of it, and I sleep well at night. So that's another little tip. Hope it's helpful for you guys. Thanks again for the invitation. Please feel free to join us over on our channel as well. Thank you guys very much for your time and have a great one.
What is going on, bro? Thank you for having me on the channel. I just want to say I really do enjoy your intros. Keep them coming. With that being said, let's get straight into it. What advice do I have for new investors going into 2021? I'm just going to think about when I started investing. So let's keep this short and simple. The first thing I thought about and was mostly worried about was, which stocks do I want to invest in? There's so much going through my mind at the moment. I want to make sure I make the right move. I don't want to make a mistake. My big thing was, which companies should I put my money into? Looking back now, what I would do is just invest in companies that you know and invest in companies that you like. It doesn't have to be any more complicated than that. It's a great way to start investing and start getting your feet wet, so you start understanding the mechanics of how buying and selling works. So you want to do this, like I said, with companies that you like, such as, let's see, Apple is one of my favorite companies because I love the iPhone. I love the Mac computers. So Apple is a great way to start. If you love shopping on Amazon, that's another great company to invest in. If you sit at home all day and you watch Netflix, you enjoy Netflix, you enjoy the content, you should invest in Netflix. If you go to Target to shop, if you shop at Walmart, any of those companies, maybe Costco, if you do all your shopping there, those are perfect companies to start investing in because you know the company already, you know their business model. All you have to do from there on is just do research to keep digging information into the company and then seeing if it's a company that you actually want to invest in for the long term. The rest will work itself out later as you continue to learn and you continue to do research. I hope that tip helps. Again, thank you for having me on the channel, and I'll see you on the next one. Peace.
Hello, the Rambling Mind. Thank you so much for having me on your YouTube channel, and hello to all of your amazing subscribers. I'm Queenie and I'm from Australia, and I'm actually currently hair in my way on my auntie's houseboat, which is really cool. So she actually lives on a houseboat, and it has multiple rooms, multiple bathrooms, and actually like a bathtub. It's pretty spacious, so not a bad place to be for the new year. So I wanted to give my stock market investing tips for 2021, and my biggest tip I think that I've learned this year and over the past couple of years that I have been investing is just to dollar cost average, because we don't really know what's going to happen in the world and with the market, and it is really difficult to time the market. So one of the things that I've really realized is instead of trying to time the market and perhaps even miss out on some gains if the market is overvalued, what I'm trying to do this year is really just a dollar cost average into ETFs and things that I just know over time will go up with time. So that's my biggest tip for investing in 2021, especially since the stock market is quite overvalued these days. I don't want to miss out on any good returns that the stock market does have. So over to you.
Hey guys, Tom here from the Investing with Tom YouTube channel, and thank you to Kelechi Waba for asking me to be on the channel to give you some tips for moving into 2021 and some of the things that I really think that beginners especially should be focusing on when they make their first few investments in the stock market. Now, the topic I want to talk about for the next minute or so is the three most important words in investing, and that is margin of safety. Now, margin of safety is simply the idea of protecting yourself from downside in an investment. One of the things that can really damage your long-term returns from investing in the stock market is simply losing money. If you take, for example, a 50% loss on your investment and go from, say, $1,000 down to $500, then in order to simply get back to where you started, then you have to make a double on your next investment. So losing money can be really painful, and one of the ways that we can protect ourselves as an investor is to utilize something called a margin of safety. Now, a margin of safety is simply the concept of buying something for less than it's worth. So, for example, if you buy a real estate property down the road from you and you expect that property to bring in, say, $10,000 a year, maybe you would be willing to pay, say, $100,000 for that property. That would be a 10% return on your $100,000 with you getting that $10,000 in rent and paying all your expenses and that sort of stuff, but you certainly wouldn't be willing to pay millions or even billions of dollars for that. That just doesn't quite make mathematical sense. And I think the same logic should be applied to stock market investing. Now, stocks move up and down wildly, and every now and again we get the chance to buy those rental properties extremely cheaply. We can buy businesses that earn like clockwork $10,000 a year, and we can buy them for $30,000 or $40,000 or $50,000. We can get massive returns on the purchase price that we pay for those businesses, and that is margin of safety. Even if the business doesn't grow as much as you might have hoped out into the future, even if the business declines slightly into the future, you've locked in a purchase price that really offers you a lot of downside protection. So that's my short piece of advice for beginners getting started in the stock market in 2021. Never forget the three most important words in investing, which are margin of safety.
We all know that the past has favored equities in the United States. That is absolutely no guarantee for what will happen in the future. Finally, remember that you eat your dollars and not your returns. The amount of returns you have before retiring has absolutely no relevance. It is useless. At retirement, how much do you have in your account? That is what you're actually going to spend, not your returns. If you got 100% return next year, 200% returns the year following, as long as you're not selling and getting this money into your bank account, those are just returns and they won't feed you in retirement.
Thanks for having me, mate. So I have been investing in the stock market now for a few years, and if I could give you just one tip for the year of 2021, it would be that cash is king. So what I mean by this is it is important to have a portion of free cash within your portfolio, whether that be 10%, 20%, something like that. If we take 2020, for example, we've seen just how volatile the market is. We had the big crash back in March, which pretty much saw all stocks sell off, including the likes of Tesla, Facebook, Amazon. And throughout the year, we've seen sell-offs in huge growth stocks that have since gone on to recover and be at all-time highs. Now, if you had free cash and invested it during one of those big sell-offs, then you would be sitting on some very nice gains right now. A new stock might come into the market that you really want to buy, but if you don't have the free funds, then you won't be able to. And not only that, a sell-off or a crash can happen in a stock at any point. And if you see huge potential in that company, then this could present a buying opportunity, which is why it's so important to have some free cash on hand so you can take advantage of those opportunities and hopefully make some greater gains. Who knows exactly what 2021 will bring, but one thing is for sure, there will definitely be some exciting opportunities somewhere within the stock market. And if you've got the cash on hand, then you can take advantage of it. That's my tip for 2021. Feel free to head over and check out my channel, Trading with CJ. Good luck on investing and Happy New Year.
Hey, what is going on, guys? My name is Trevor with Trevor Hassel Personal Finance and Investing. Just want to hop on here real quick, give you a quick tip on this video series here. I want to talk about volatility and how to handle it, because we saw in March of 2020 and we saw in December of 2018. I've only been in the markets around coming up on 4 years now, so I don't have a ton of experience. Probably a lot of other people that are doing these videos on this video here is more experienced than I am and been in the markets longer, but I can tell you the people that made the most money and the times I bought the most in were end of 2018 and March of 2020. Not because I knew it was a good time to buy, or I knew that they were an all-time low in stocks, or I predicted everything was going to happen, but I was in a position to be prepared. Okay, we talk about all the time where cash is important to have at all times. You should have cash ready to go, take advantage of opportunities in the market. The people that got burned the most were the ones that freaked out in the volatility and the volatile times. Let's talk about 2018, end of March 2020. There was a lot of people that sold out at the very, very bottom of the market in March 2020, right? Why did they sell out? Because they saw that their 401k, their individual account, went from 400,000 to 300,000 within a matter of a week or two, right? And they panicked. The theme of this video, this short video, the only people that get hurt on a roller coaster are the ones that jump off. That's straight from Dave Ramsey, right? Think about it. The only people that got hurt in March of 2020, looking back on it now here in December of 2020, coming up on January, are the people that jumped off and sold out of everything out of panic, out of pure panic. The ones that are doing really, really well right now either held through the crazy chaos and the uncertainty or bought more of companies at great prices. Okay, so the theme, do not panic sell, be prepared for volatility, put yourself in a position to win, and put yourself in a position so that when volatility comes, and maybe we have something like we did in 2020, and then at the end of 2018, you are prepared and you are coming from a position of power, and you are not freaking out about every little thing that happens, all right? I hope you guys have a great rest of your 2020. Cheers to 2021. Have a great year. See you on the next one.
First of all, I want to say a big thank you to every single creator that got on here and made a video specifically for this purpose. I want each and every single one of y'all to go down in the description and check each and every single one of their channels out. They make amazing, amazing, amazing content. So go ahead, while you're still watching this, scroll on down in a new browser, click the link, open it up, and go subscribe to their pages. All right, here's my tip for y'all. And it was the whole purpose of this entire video. Learn from other people. Never try to figure every single thing out on your own. Learn from other people, because they have insights from experiences that they've had that they can share with you, which was the whole point that I wanted to share from this video. But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this entire thing, which you should have learned way more than that. But anyway, I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and I'm out. Peace. Whoosh.